Tesla just confirmed jaw-dropping news. Tesla's energy storage deployments are up 132% quarter over quarter. This morning, Tesla stock is up 9.3%. Troy's more accurate at predicting deliveries than Wall Street, and he was expecting 423,000, but the actual number came out at 444,000 almost. Troy's number was the whisper number that Tesla had to beat for the stock to go up, and Tesla is seriously beating expectations here. Almost no one believed Elon Musk when he said that Tesla's energy business is going to grow 200 to 300% this year, but I think people are taking Elon Musk a bit more seriously now. Oh, but this is impossible, they said. Well, Elon Musk has done the impossible again. What do you say to Tesla bears? Once Tesla fully solves autonomy and has Optimus in volume production, anyone still holding a short position will be obliterated, even Gates, Bill Gates. This is a dire warning to all Tesla shorts, and those that sold Tesla stock in the long term, they will deeply regret it. If you like the short sellers being obliterated today, click the like button and subscribe. Just keep in mind that this is a new channel and videos here later will be political, and Tesla videos will be back on a Tesla channel. If you thought just a moment ago that the energy business growing so fast was impossible, you have to reconsider other things. Maybe actually full self-driving and robotaxis are possible. And what do you think is going to happen when people figure out that's the case? Do you think some of them will buy Tesla stock, like a lot of it, like put their life savings into it, and institutions will go, oh, we need to increase our allocation to Tesla stock and we need to buy tens of billions of dollars of Tesla stock? I mean, you put all of them together and you will probably have like hundreds of billions of dollars of Tesla stock being purchased just by institutions. Remember, Tesla's market cap is only a little bit over $700 billion. So by how much do you think the stock would get pushed if institutions start buying that much? Well, we can look at Nvidia. That stock is up almost 3,000% in the last 5 years, or almost 1,000% since 2022. A moment like that, I believe, is also coming for Tesla. It's inevitable, really, when you think about it. In the short term, a lot can happen, but in the long term, I believe that there is a lot of growth left for Tesla's deliveries. Production for Tesla in Q2 was at 411,000 almost. Here's a chart showing this, but Tesla's energy business is going to be a lot more interesting if you are looking for growth in the short to medium term, because this is Tesla's energy storage deployments in 2023, and already so far in just 2 quarters, we have almost exceeded all of 2023, and we still have 2 quarters left. And don't forget that Tesla's energy business has margins that exceed the margins of the automotive business. How crazy is that? And that business just more than doubled in one single quarter. And remember that Tesla's Megapack factory is being built in Giga Shanghai right now, and seems like things are going pretty well at the moment. So next year we could have some serious growth also in the energy business. I think today people are going to understand a little bit better what Elon Musk meant when he said that Megapack demand is quasi-infinite. You just need to produce them. Now, this huge deployment does suggest that Tesla's Lathrop Megapack factory is almost nailing full operational capacity, which is 40 gigawatt hours per year. Tesla's new Megapack factory, currently under construction, is in Shanghai, is also designed to have a capacity of 40 gigawatt hours per year. And we know that in China, things are done fast. So it is fairly reasonable to expect high growth next year as well. For the time being, each quarter, it's very unlikely that we will exceed 10,000 megawatt hours deployed, because that's basically the capacity per quarter. The only way you can have more right now is if you stock inventory and then deploy it the next quarter instead of the current quarter, which is quite likely to happen actually in the energy business. So don't be surprised if next quarter things are looking even better or quite a bit worse. Expect some lumpiness going forward, but this proves that Tesla's business in the energy industry is indeed thriving. However, Q2 earnings report is going to be somewhat important, because we also want to see, are the margins really that high still? And if they are not this quarter, maybe it's because Tesla had extra costs this quarter, and maybe later the costs will come down. So we want to watch these margins carefully for the next few quarters when it comes to Tesla's energy business. And then in the ideal world, if Tesla figures out how to manufacture batteries with that dry manufacturing process, Tesla will absolutely obliterate the energy industry. Because if we have margins this high already using other companies' batteries, what do you think is going to happen if Tesla's batteries are actually better than those of the competitors, and Tesla produces the batteries themselves and then puts them in the mega packs? I'm looking forward to finding out what happens. It will be fun making fun of everyone who sold at the bottom or during this difficult period of time. In the meantime, Tesla's fleet has now reached about 6.3 million cars, which of course helps with FSD development because we have so much data. And Dave Lee also predicts that Tesla's earnings this quarter compared to the last quarter should be quite a bit better. This earnings call is going to be pretty important. It will be on Tuesday, on July 23rd. You definitely don't want to miss this one. And I would like to remind everyone that relatively speaking, Tesla's energy business compared to the auto business isn't that big, but this is from the previous quarter, and this quarter is going to be quite a bit better. Mind you, this is Tesla's net income, so this could double or more than that. And if you have a business growing at 100% year over year, while the other business in the short term stagnates a little bit, this little color is going to seriously expand. Morgan Stanley has a new note and they are excited too. Is Tesla getting its mojo back? They are asking a little more than 2 weeks ago. Our clients were preparing for shareholders to reject Elon Musk's 2018 compensation package, potentially setting up a change of management and strategy, compounding many months of negative news flow. Fast forward to today, clients are beginning to ask us about positive catalysts into Q2 results and beyond. We're getting asked for our proprietary Tesla energy model and even our humanoid robot tab model. Is this the same Tesla from early June? Yes, it is, except some people are waking up now. Most are not even realizing what's the opportunity out there for Tesla's FSD business. Morgan Stanley called the energy storage deployments a show stealer. From today's update is the all-time record high stationary storage number, which was nearly 2x Morgan Stanley's forecast, and they reiterate their bullishness for the energy business. As generative AI acceleration spurs a multi-generational increase in energy demand, electricity generation, and data center investment, we believe investors will begin to pay more attention to Tesla Energy, which we value at $36 per share right now. They might need to seriously reconsider how they value the Tesla Energy business because it should increase quite a bit more, assuming that Tesla really keeps growing like this. And while Elon Musk believes that Tesla's deliveries this year for the auto business are going to be higher than the previous year, Morgan Stanley still thinks that's not going to happen. Another good thing though is inventory was reduced, which gives Tesla a boost of $1.5 billion to working capital. Tesla delivered 33,000 units more than it produced in Q2, which created a 7-day reduction in days of supply. Morgan Stanley expected a $600 million tailwind. Instead, we got a $1.5 billion boost. And Morgan Stanley's Q2 forecast for $0.9 billion in free cash flow burned looks incrementally more conservative. They admit that. They point out that today was a reminder to investors that Tesla is not just an auto company, it's an energy company, it's also an AI company. It does make cars, which will later be turned into robots on wheels. Very bullish sentiment today everywhere. A Bloomberg reporter says it's interesting that there's no commentary in the Tesla quarterly production and deliveries release for Q2. Well, there has been a bit of a change in strategy and Tesla didn't want to write, "We reduce production to stabilize prices and earnings." Here's the whole page. Omar points out that Tesla produced 69,000 fewer vehicles in Q2 2024 than they did in Q2 of last year. Did the directive to produce exactly that many fewer vehicles come from the top? Elon, did you do this? But here's what I really care about. FSD. This is the newest version that was just released. 40 minutes, needing only one accelerator tap the entire drive. Look at some of the Tesla bears just crying. I really believe the Tesla Q2 deliveries that have been posted are fraudulent. I really like this. I hope Elon promotes FSD more often like this. Yeah, it's awesome once you use Tesla Autopilot FSD for commuting. You won't use any other car. This was posted to his main timeline, getting 6.4 million views. If you think that this does help sell FSD and at the same time Tesla cars, you are definitely right. Ideally, I would like to see posts like this weekly, and daily would be even better. And Omar predicts record Tesla deliveries when FSD rolls out worldwide. And he points out that Waymo cannot do this for him yet. The only solution for a hands-free trip across the peninsula is in a Tesla if you want to own the vehicle. And it is definitely not acknowledged enough how far ahead Tesla is compared to Waymo in so many aspects of full self-driving, including, for example, cost. Now, I am not getting results like this, but someone says, not sure. Most people realize how good the software has become. I've been getting 150 plus miles without a single intervention. He probably lives in San Francisco or in California. Tesla today has dropped Megapack pricing by about 15% from a few months ago. It will be important to look at these margins going forward. Maybe Tesla found ways to cut production costs because the factory in Lathrop has now ramped. So this is not necessarily bad news. I do like our new chief financial officer though. He was sandbagging so heavily on the Q1 call. He guided for at least 75% year-over-year growth when it comes to increased deployments for the energy business. Energy indeed is one of the hidden giants in plain sight, although not so hidden after today. A big shout out goes to Larry. He was the most accurate retail analyst for predicting deliveries this time. James came in second with 430,000. Brian also came in second. It's a tie between those two, 430,000 each. Oh, actually, if we include Prasad, he won. He was at 435,000. I reported BYD's BEV sales, and if Tesla would have not really beaten the Whisper number, yeah, it would have not been the number one BEV brand this quarter in terms of the total number of vehicles sold. But for now, this puts Tesla safely in the number one best-selling BEV brand worldwide in Q2 and looking at the trailing 12 months as well. And I think Omar has a fair point here, to be honest. The only Tesla production and deliveries that really matter are production of FSD models and deliveries of FSD updates to cars. Both numbers need to grow a lot. We are now getting more delivery numbers that show us what happened and how come the deliveries were higher than expected. So China, actually the last week here was decent at 14.1 thousand, but not spectacular. So the surprise didn't come from China, it came from other parts of the world. Here's Denmark, which did pretty well compared to the previous quarter. Italy did pretty well. It actually did spectacularly well. Here's Belgium doing all right. But the main reason for higher deliveries was managing the inventory in the US, which now has been reduced significantly. So it was the sales in the US that exceeded expectations. But it also could have been very high sales in Germany, Australia, or Canada. We will find out in the next few days. In the meantime, Tesla is making some pretty serious moves. Tesla appointed a new head of production at Giga Berlin. So Tesla is trying to optimize his production processes better over there. The new manager is experienced. He will take over the management of almost all Giga Berlin production except for the battery factory. He's been with Tesla since 2020. The previous manager resigned in mid-May for personal reasons. By the way, the cell division currently is exclusively just for the Cybertruck, and this is in Giga Berlin. This change is aimed at improving collaboration within teams. There is a statement here. We wanted to bring the teams closer together by bringing together the powertrain and vehicle organizations. Overall, this seems to be a positive development. Gary Black posted this yesterday, and did he sort of throw an egg on his face by accident a little bit? Well, you decide. The next big Tesla catalyst is intro of the $25,000 vehicle. I can see August 8th as a big catalyst. A supervised Tesla network does not change the valuation equation unless unsupervised robotaxi is ready on August 8th, where Tesla assumes liability for injury or damage of a fleet of supervised robotaxis. The August 8th event could be a letdown. Well, the stock is up big time today, and largely it's because of the mega packs as well. So the mega pack business could be a pretty big catalyst for Tesla. So if Gary made that post today and not yesterday, it would have looked quite a bit better for him. However, I do think that Gary made some fair points here. Omar just published his V12.4.2 drive. There were 0 interventions, but there were also some weird moments. Not as slow as the last build, but still often drives too slow with auto speed on. He did another drive. This one was also without any interventions. It was 16 minutes. After driving a little bit on the newest version, Omar said, "It feels like Tesla is struggling to learn how to iterate on FSD with a new end-to-end architecture. It seems to be difficult to drive down the error rate while also preserving all the positive aspects of the driving model. The process of iterating on FSD is now very different." However, when it comes to solving very difficult problems, I believe that Tesla has the best team for it. Definitely, you don't want to bet against Elon Musk. Dylan, however, I think has a fair point here. Cheering about no code is great and all, but it's going to bring some new challenges. Also, I think they figure it out, but progress may be bumpier than many are expecting. In other words, the moment Tesla figures something out or figures how to work with it, we might see another exponential improvement very fast, almost out of nowhere. Also, let's remember that everything is trained on hardware 3. So if somehow hardware 3 reaches its limit, we have hardware 4. And the difference between the two is huge. This is from hardware 3, and this is what it looks like when you zoom in. This is hardware 4, and this is what it looks like when you zoom in. And you can clearly see the difference in detail. Obviously, here you basically have supervision when you drive. But up until now, basically Tesla is only using hardware 3 capabilities to train the whole fleet. So there's definitely going to be a performance boost that will be unlocked eventually when Tesla really uses the potential of hardware 4. And then after that, remember, there's hardware 5. And by the way, these massive fans that you see here and the computer cluster that Tesla is building in Texas right now, that's going to be all for hardware 4. I thought this was pretty interesting. This is the first updated Cybertruck charging curve from this account. He installed this new Cybertruck update for DC fast charging. He got the battery down to 23%, but he forgot to precondition the battery. And today's session is in dotted red, so you can see that this new update seems to be all right. And interestingly, when you compare the Cybertruck to the Rivian or the Ford Lightning, at first it charges quite a bit faster, which is really where charging is the most important. So assuming that you precondition your Cybertruck battery, the results should be even better than this, which I think are all right. I would rather have fast charging in the very beginning because often you don't really need to charge that much when you are on a road trip. But V4 superchargers, I think, are pretty important for the future of Cybertruck owners. I mean, you can use V3 superchargers, but V4, you're just going to have a better experience, assuming that the Cybertruck later can actually take all the power. This is just funny. Are electric cars responsible for Britain's pothole problem? Question mark. There's a community note, clickbait headline, as it states in the article, EVs are not responsible for this issue. Omar gave us an important update about FSD. To those users who are waiting impatiently for hands-free FSD, please know that Elon Musk is sleeping on the training cluster data center floor, personally blowing on the GPUs as fast as he can to help cool them down so they can train his model as fast as possible. As we all know, the cooling breath of the billionaire is a crucial ingredient for any good training model. Okay, let's get back to being a bit serious now. Sure, with the benefit of hindsight, we could have owned more Tesla stock, admits Gary Black. He owns 3.3% in his portfolio. But the stock that replaced Tesla as our number 2 position, Nvidia, is up 146% year to date versus Tesla still down 8% year to date and Nasdaq up 18% year to date. At $229, Tesla stock now trades at 94x 2024 earnings, which is a 2-year high, which also is 2 years closer to Tesla solving FSD. On 2025 earnings per share, Tesla trades at 70x PE, and he continues by saying that earnings per share estimates continue to fall, which makes Tesla look less attractive, not more attractive on valuation. But are these estimates really going to accurately reflect Tesla's energy business? The really good news is that Tesla finished goods inventories days dropped by 33,000 in Q2 from 28 days of sales outstanding at the end of Q1 to 20 days outstanding now. And the pressure for Tesla to reduce prices further as Tesla begins Q3 seems to have abated. So yes, we are fine with our 3.3% in Tesla. This is from June 14th. And back then, Gary Black had a $200 price target for Tesla stock, which he predicted we will hit in 6 to 12 months, but we hit that in about 2 weeks, with Tesla stock now trading above his price target. Is Gary Black going to sell Tesla stock? I wouldn't be surprised if that happens, but Gary Black still owns Tesla stock, so technically he's bullish, but it's below his price target. So from Gary Black, I either expect more Tesla stock selling or an increase in his price target. Here's AJ's Q2 financials update. He recommends that all Tesla investors read this thread in full. Here's a summary of his predictions. Green means more. Average selling price should be improved due to more Cybertrucks, and remember that these are Foundation Series Cybertrucks. AJ assumes about 10,000 Cybertrucks delivered. Automotive revenue to increase by 15.5% quarter over quarter. He expects energy storage pricing to reduce further, but revenue to increase 100% roughly quarter over quarter. He expects service and other revenue to increase as well. And here's the big one. Total revenue increases 22% quarter over quarter to new all-time high of nearly $26 billion in a quarter. He expects Cybertruck to deliver first-time positive gross margin, an automotive margin to increase to 19.5%. Wall Street would love this. Here's a big prediction. Energy storage ramp efficiency gains and decreasing battery costs drive record margin despite lower pricing. He projects a margin of 26.1%, which would be even better than before. He expects total gross margin to increase by 1.4%, so in total to 18.7% due to good deliveries and amazing energy business performance. Research and development expenses are expected to reach a new record high. Also remember, Tesla laid off quite a few people, so that should help Tesla with efficiency overall, although these severance packages will cost Tesla. The restructuring charges equal roughly maybe $350 million. Net income increases 64% quarter over quarter to $1.8 billion. And he's projecting an EPS increase of 42% to 64 cents per share. And here's some more good news. AJ expects material Wall Street upward revisions for both Q2 2024 and the next 12 months outlook, which is driving analysts' price targets. So that was a good update from AJ. Look at the media, seriously. They really did say Tesla posts disappointing production and sales numbers for Q2, despite the stock jumping so high. Very disappointing. That's it for today's news. Make sure to like and subscribe if you haven't yet. Just keep in mind that this is a new channel, and later the videos will be political on this channel. The Tesla videos will be put on a separate channel. So those of you who don't want to see anything political, don't worry. All the videos will be separate. Keep in mind though, if you strongly disagree with Elon's politics, you might get triggered. So in that case, if you don't want to be triggered, it's up to you if you want to subscribe. I'll just post a few more videos on this channel to get the momentum going, and then later all the videos will be back on the Tesla channel. And I just uploaded a new Patreon video. This proves there's big room for Tesla in this specific space. This is not at all related to anything that I covered today. So if you are a Patreon member, go ahead and watch that video. Or if you are not a Patreon member, feel free to sign up through the link below.